Our conversation today is about a smart financial management for your business growth. Managing your finances doesn't have to feel overwhelming, right? In this session, we'll break a financial concept into simple and actionable steps that you can start using right away. So, are you as excited as I am? Let's dive in together. So, without further ado, well, let's see what we are going to cover today. So we are going to talk about making sense of your numbers. Then we will move on the designing a cash flow that works for you. We are going to touch base on budgeting strategies and also talk about risk mitigations and identifying some areas of risk in any business. In today's competitive business environment, financial management isn't just about tracking numbers. It's about making informed decisions that lead to sustainable growth, profitability, and long-term success. And I believe that's why you are here today as well. Understanding your financial data isn't about crunching numbers. It's about seeing the bigger picture and making a smarter decision. So something that I always tell all my clients, because crunching the numbers and really seeing them can be overwhelming, and even understanding how to put it together and how you calculate it. But you have to see beyond just crunching those numbers to be able to make smarter decisions and move your business forward. So let's explore how you can use these numbers to steer your business towards success today. So there are three key financial reports that I wanted to touch base on before we move on and talk about cash flow and budgeting. So first one is your profit and loss statement. Think of this as your business report card. It shows you how much you're earning, spending, and whether you are making a profit or loss. So I have an example here for you from one of sample companies that we work with. If you look at the screen, you see how this profit and loss is structured. At the beginning, we are talking about our income and our sales. And then after that, we are looking at our cost of sales. And a very important line to always look at and consider is your gross profit. And then from there, you will have most of your fixed and operating expenses listed. And at the end, hopefully, you are making a profit. The second key financial report that I really want you to start looking at it in your business is your balance sheet. This is like a snapshot of your business financial health at a specific moment in time. So it shows you what you own versus what you owe. As simple as that. So another example that I have here for you is starting from this business's cash and accounts receivable and inventory and their total asset, showing what they own versus what they owe, which are their current and non-current liabilities that can be your loans, as well as how much the owners brought to this business. And the last financial report is your cash flow statement. Cash flow statement is where you see the movement of cash in and out of your business. It helps you understand if you are managing cash well or if adjustments are needed. So again, another cash flow example on the screen showing how much money is coming in our business from our operating activities, which is your main day-to-day activities of the business. Understanding how much you're investing or spending money in the investment area, such as buying like furniture and equipment, and your financing activities if you're given a loan or if you're seeking a loan. So that's where you will see, we will see those money coming in or going out. And hopefully you are always in the green and having surplus cash. So three financial report for you to always look at, always review. I don't know if you have a bookkeeper, if you have an accountant that regularly submit its report to you. I don't want you to ignore those emails going forward. Or if you are a solopreneur and doing QuickBooks yourself or like keeping all those information in Excel, would love for you to start understanding how you can put those statements together and then really start looking at your business from a financial management perspective and not just running your day-to-day, which is critical, but then that financial literacy and management part of your business also as a solopreneur is key. Beside those three financial statements, we also have different metrics that we need to watch in our business. And these metrics can be different from a business to business, but like three key metrics that a lot of business owners look at. And also it's important when we as business consultants are looking into the business, our gross profit margin, which is I guess the most famous one. This tells you how well you are doing at making a profit on each sale, after covering the cost of goods, or your operating expenses. Keep an eye on those costs to make sure they are not eating into your profit. And of course, your net income or your bottom line. If you have heard about the bottom line as opposed to net income, which is the more famous terminology, which tells you what's left after all expenses, and it's a crucial indicator of your overall profitability. So let me leave you with this question. What is one key financial metric that you currently use or you want to start tracking? So if you want to take a moment to maybe write down a couple of notes, you're really keen to understand your cash flow, your gross margin on a quarterly or monthly basis a bit closely, or your overall health of your business, I would love for you to take those notes. And if you're tracking all of them, well done to you and your team. Our next lovely subject is cash flow management. Cash flow is the lifeblood of your business. Managing it well means you can cover expenses, invest in growth, and avoid unnecessary stress. Let's dive into some practical ways to keep your cash flow in check. For all of us to understand cash flow better, it's all about tracking the money coming in and going out. Positive cash flow means you have more money coming in than going out, which keeps your business running smoothly. Definitely, there are strategies for us to have a better cash flow. And the first one, as always, is start with collecting money faster, right? So if we can increase the speed and the volume of cash coming in, then we will have more control of managing it and also understanding what goes out and what's left. So first, I encourage all of you to invoice promptly. So especially if you run a service-based business, set reminders for yourself or your team a couple of days ahead of the month end to submit your invoices and follow up on overdue payments. There is nothing wrong with reaching out to your clients or customers and say, hey, these invoices are unpaid and I would love for you to start paying them. Second one is managing your expenses wisely. If in your business or your personal finances, it's key to review and control our expenses and make sure that we are not overcommitting or overspending unnecessary costs. And the last one is maintaining a cash reserve. Having a cash buffer really helps us to be ready for unexpected expenses, to be able to support our slow month without panicking. Many of us small businesses are seasonal, or there are some months that we see a peak in sales and some months are quiet. So having and maintaining that cash reserve will really give us that buffer and also peace of mind to be able to still run our business smoothly. So when I work with my clients to put a cash flow forecast together, they sometimes feel overwhelmed by the amount of activities or expenses or lines that they need to predict. And I always tell them, cash flow forecasting isn't just about predicting the future, right? It's about being prepared for it. Predicting a lot of things in the near or long distance future is really hard because there are so many unknown things that can happen in the economy and the environment that we are in. And cash flow forecasting involves estimating your future cash inflows and outflows based on historical data, planned activities, and expected changes in your business. It helps you anticipate potential cash shortages and surpluses before they become an issue. I love cash surpluses, so that's okay. But we really need to be ready for what's about to come. A good cash flow forecast helps you plan for upcoming expenses and make informed investment decisions and ensure you have enough cash on hand to cover your obligations, right? So especially if we have a lot of customers deposits, so hence we have obligations to our customers and we have collected the cash already, we need to make sure we have resources on hand, inventory, the team that needs to service those orders to be able to really cover and address our obligations. It also provides peace of mind, knowing you are prepared for both opportunities and challenges, and hopefully most of them are opportunities. As part of our session, I have also provided you with a cash flow forecast that I would love for you to try the template. But here are some key tips that you need to bear in mind. So start with listing all your expected income sources, such as your sales, if you are getting a loan, or if you are getting any investment or government grant. From there, outline your anticipated expenses. So some of them are really easy because they are fixed and they are happening month over month, such as your rent or your utilities. And some of those costs might be a bit tricky to put together and predict, such as your salaries if you are using subcontractors or seasonal workers, and some of your other operational costs, such as marketing. But you can start linking those to the activities and sales that you are predicting in the coming month. So if you can line up those sales activities with your expenses, you can easily predict what's about to come. And for sure, use our template, and I would love for you to tell me how it's working out for you. So here is my question for you. How often do you track your business cash flow? Do you track it daily, weekly, monthly, or never? If that's the case, please put that in your calendar to at least start looking at your business cash flow on a monthly basis. And if you are really feeling satisfied with your monthly review, try to look at that on a weekly basis. So we talked about cash flow forecasting and why financial management matters so much for all our businesses. So let's now move on to see how we can craft a budget that works for us. A well-crafted budget isn't just a financial tool. I just want you to realize that. It's your roadmap to achieving your business goals. It's like a business plan. It's like goal settings. But all those goals are now translated into your numbers. It helps you allocate resources wisely and stay on track. So let's explore some effective budgeting techniques to make sure your budgets support your business. So effective budgeting starts with defining your business goals and translating them into financial targets, as easy as it sounds. So when we talk about budgets, we feel a little overwhelmed that now we need to put everything into a spreadsheets and start tracking numbers and all that. But if you just want to take one step back, they really are your business goals. Yeah. And we are just translating them easily to financial targets because then we can start measuring them. And you know, what gets measured gets managed. Whether your business goal is about increasing your sales, expanding your product line, or managing expenses, your budget should align with these goals and help you track your progress. Categorize your expenses into fixed and variable costs. Fixed costs, as the name indicates, remain constant, like your rent, as we discussed earlier. While variable costs can fluctuate, like the materials you buy for your cost of goods. Regularly review these expenses to ensure you are not overspending in any area. And you can always use budgeting software or spreadsheets. Some softwares might be a little bit costly, but you can definitely go to a spreadsheet, use Excel or Google Sheets, and track your actual expenses against your budgeted amounts. This helps you spot any discrepancies early and adjust as needed. And a lot of business owners and even some clients of mine at the beginning, they thought creating a budget should be something that happens at the beginning of every year and we never go back to it. But a flexible budget adapts to changes in your business environment. If you experience unexpected costs or revenue fluctuations, if your business is seasonal or something such as economic downturn or COVID is happening, adjust your budget accordingly. This ensures your budget remains a useful tool even as circumstances change, because we don't want to put all these efforts and sweat and tears into creating a budget that we are never going to use. So definitely be smart and start using what you are already putting a lot of effort into creating it. And as I mentioned it in the cash flow forecasting, please regularly review your budget to ensure it reflects your current business situation and your goals. If your goals have changed, for example, if you had a specific goal in the budget that you thought you were going to hit it in 1 year, and because of all the amazing things that your team and yourself you are doing, you hit that goal in 6 or 8 months. So maybe your goal is now something different, right? So start to really build those goals into your budget revisions, as you can call it. Monthly or quarterly reviews allow you to make adjustments and stay on track towards your objectives. So here is a budget versus actual report that I wanted to kind of start putting together if you are not. It's really important to track your progress, right? So if we have already set those goals, it's important to understand where we are today and how we can close that gap. For example, on the screen, if you can look at this business, their budget was to sell 1.3 million of the items that they were planning to, but in actuals they are still not hitting their budget, right? So then just looking at this variance prompts you with so many questions that you can start dig into it and understand where your bottlenecks are. Is it because of the market condition? Is it because the sales team are having trouble that as a business owner you are not aware of? Or what is the underlying reason, and how you can start strategizing your resources to close this gap. Another line that is important on this example is, for example, their gross profit margin. They were supposed to hit 55% on their gross margin, but now they are only at 51%. So I would love to know why this gap exists. Did we have expenses that we did not foresee at the beginning? Are we getting hit with more expensive bills from vendors that maybe we can negotiate, or perhaps we can outsource some of our activities to bring our gross margin in check with the budget? So yeah, just one number and start questioning where we are and where we were supposed to be prompts you with so many great actions and first questions to start diving into, which puts you on a great trajectory for your business growth. Now, let me ask you another question. Do you have a budget that you are tracking? It's never too late to start. Let me tell you that. It's never too late to start. I know that we are in October, but you can start with a simple Q4 budget, only 2.5 or a little bit left from this year, and easily roll that into the new year. Let me tell you why I'm encouraging you to start with a Q4 budget. Because if you want to wait until the new year hits, you are going to be almost in February by the time you come back from holidays or you will start understanding the new year's dynamic. So you feel like you are going to again be late. So this process never starts because you feel like it's always too late. So start right now and roll that into your new year's numbers. After going over some budgeting strategies, it's time for us to identify some financial risks and think about what are the mitigations that we can put in place. Let's be honest, every business faces different risks, right? But with the right strategies, you can minimize their impact and keep your business on track. Let's look at how you can identify potential financial risks and put measures in place to protect your business. Look out for risks like cash flow shortages, unexpected expenses, or changes in the market condition. Identifying these risks early helps you prepare and respond effectively. Regularly review your financial statements and business environment to spot any red flags or emerging risks. So if you want to think about the areas that we discussed so far, we have talked about those financial statements, and I invited you to review those statements periodically. Look at those financial matrix, and all of those really support you with spotting any red flags in your business. So once you spot those red flags and identify those risks, it's time to implement some risk mitigation strategies. Some risk mitigation strategies that come to mind, and I listed it here for you as a guide, starts with diversifying your revenue streams. So don't rely only on one single source of income, especially when the market conditions are changing. Diversifying your revenue streams can help protect your business from downturns in one area. As we discussed in the cash flow forecasting section, you can definitely build an emergency fund. So set aside funds especially for emergencies. This financial cushion can help you handle unexpected challenges without derailing your business. Ensure you have adequate insurance coverage to protect against risks like property damage, liability, or definitely business interruption. And then review your contracts and agreements and make sure they are fair and clear. Regularly review them to ensure they protect your business interests and minimize potential disputes. Let me share an example from one of my clients with you. So they had a couple of big customer orders that they were preparing for, and they didn't realize that the contract that they had with this customer, it was not clear. So they could pull their order whenever they wanted, but my client had already committed to buying inventory and really putting the labor and all the effort in. So if your contracts are not clear, before you really dive into the actual work, make sure what you are dealing with. And definitely strengthen your supplier relationship, because having a strong relationship with your suppliers can help you manage risks related to supply chain disruptions, such as what we experienced during COVID and even today. Communicate regularly and build reliable network of suppliers. So if one pulled out, you can always go back to your network, and the work never stops. And if you don't have any key performance indicator that you're currently reviewing in your business, I highly encourage you to build a couple of them. So those key performance indicators are almost similar to those metrics that we discussed at the beginning. So for example, if one indicator that's key for you is like how many items are sold, definitely make sure you have that set up. Or if the social impact of your business is another key performance indicator, make sure to keep an eye on those and quickly identify any areas of concern. Early detection allows you to address issues before they become major problems. And last but not least, conduct regular risk assessment to evaluate your business exposure to various risks and adjust your strategies as needed. This proactive approach helps you stay prepared for potential issues. Staying proactive is really the name of the game, and it's something that guarantees your sustainable growth. Let me ask you the last question for this session. Are you ready to take your financial management to the next level? I really encourage you to implement what you have learned today. I know we dived into so many areas of financial management, but I want you to go back to your notes and start implementing at least 2 or 3 of them. And if you need more help, please don't hesitate to contact us. We are always here to support you. And let's keep moving forward together. Thank you so much for joining us today. And I hope you enjoyed this session and you already have a lot of takeaways and action items that you're ready to implement in your business. Make sure to go check out those templates that we have for this session and enjoy implementing them. Talk to you later. Bye.